Pick a card, any card. Luka base Prism PSA 10, down 40% from August. Kevin Durant tops Chrome, down 20%. LeBron James tops Chrome, down 11%, and $3,000 in the last 30 days. You get the idea. The NBA season is less than 20 games in, and the card market seems to have flamed out. In my last video, I discussed specifically on the free fall Kobe Bryant rookie cards, and following up from that video, I'm going to expand the reach to cover the larger NBA card market in general. Welcome guys, Cardboards here, where we discuss cards, money, and investing. Weekly Binder Talk episode number 18. Subscribe if you like this sort of content, and let's get to it. So let's answer the question to the title of this video. Wait for it. Buy the dip. Well done, Cardboards, that was groundbreaking. By all seriousness, what do you buy in times like this? The guys who are really balling out this year, Steph Curry, Ja Morant, Kevin Durant, Giannis, and if you also include DeMar DeRozan, hasn't exactly light up the hobby on fire, not in a way we've witnessed in the last couple of seasons. So what has changed? Well, I can tell you that the league hasn't done anything different, and the interest in basketball is just as strong as ever. What's changed is investing dollars. Gone are the days of excess stimulus money, rising crypto prices, and also mad rush for fear of missing out. Back is the good old days of passionate collecting, organic growth, and just purely enjoyment of the sport and hobby. Similar context to my last video about why Kobe rookie card prices are falling hard. Other players, both current and retired, are not spared from this downturn. As a whole, we're looking at a market dip, though certain cards, especially on the higher end stuff, remain strong. But don't let this illusion fool you that only the lower end stuff are trending down. The one reason why prices for higher end cards are holding up is because there are far fewer transactions on them. It's no secret that most investors will want to try and get in on this and perhaps try to capitalize on the downturn to buy up higher end stuff at so-called cheaper prices. Unfortunately, current owners are not having any of that, and prices are holding strong. So be sure to check out those last transaction dates on the comps. And that's not the same for smaller cards such as your base, your silvers, your parallels, even your higher series serial number cards, say 99 and up. All these are greatly affected by the apparent downswing. But what's causing the downswing actually? Certainly it's not due to lack of interest in the sport or the player's performance. Ja Morant is doing great. So why are some of his cards considered so affordable today? Well, I got news for you guys. Investors are pulling out. But why? Let's hop into my time machine and zoom in the start of the pandemic back in 2020. Stimulus money, crypto, last dance, YouTube content, all those fueled interest in a hobby and gave birth to a group of people who labeled themselves as investors. Well, to be frank, it's actually quite deceiving because these 2020 investors are essentially looking at the market, in this case sports cards, makes the assumption that if they poured in some money, it would return them 2 or 3 folds in a short amount of time. Well, at least for the first 12 months, they were not wrong. During that period, no matter what you bought, and if you received some form of education, be it from YouTube or social media, you would be doing quite well for yourself, giving yourself a pat on the shoulder. Unfortunately, like all markets, especially something as speculative as trading cards, growth is never sustainable at this rate, and things start to come down when there isn't continuous collective sizzling, hypes, or price speculations. All these normally caused by entrance of new investment dollars. So these 2020 investors begin looking at their portfolio today and start to see value eroding by 10 to 20% over the course of a few months. They turn to the book of wisdom, i.e. YouTube, for guidance. Unfortunately, if you search YouTube for someone giving you hot tips today of what's great about the market now, you're going to be hard to find any because people are afraid to create false hypes. After all, those YouTube channels are a source of their income stream. It'd be crazy if they were to say something they themselves didn't believe in and to potentially lose a number of subscribers. Hell no. So now, at a loss, the 2020 investors can only do one thing: pack up the things, sell the stuff, and move money to something else that's doing better. Maybe a different genre like Marvel, comics, NFT, MetaZoo, or go back to traditional investments like stocks and bonds. But the exit of investment dollars from the sports card market puts even more pressure on the downward prices. Now, I'm not saying this is a bad thing. Everyone is entitled to do what they want with their money. I'm just explaining the possible situation we are experiencing at the moment. Experienced investors rarely sell into the downswing market unless they have extremely low entry point, which can still profit, or they have some liquidity issues. But for those groups that are cashing out now at a loss, yeah, that's gotta sting. You can just do the math on how much equity has eroded for Luka-based Prism PSA 10 or Zion-based Prism PSA 10. At least these are rookie cards. What about those second-year base cards in slabs? But having said all that, there might be still light at the end of the tunnel. Circling back to the beginning, what should we be doing right now? Buy, sell, or hold? Well, if you're actively operating this market, the answer is actually all three. There are deals to be made both from a buying and selling perspective, and there are assets which should be put on ice at the moment for a while. But I'm going to repeat my mantra again. I strongly believe lower end slabs are the way to go now. Stuff that's $100 can easily go up $30 or $40 compared to a $1,000 card, to go up to $1,300 or $1,400. It's a lot more work, but you gotta do what you gotta do. Pulling up examples of earlier base card slabs, it's actually not difficult to see buying a couple of 2018 LeBron James Optic PSA 10 base, his first year in Lakers jersey at $25 a piece, and then flipping these at trade nights at $30 or $40 trade value. Remember, these were once $250 card back at the start of the NBA bubble in 2020. There's of course no way we're seeing those prices again, but there is still some level of collectability on this particular card, and making $5 to $15, which actually translates to 20% to 60% equity value, doesn't seem far-fetched. You can go on to Prism Silver, say Shea Alexander, Prism Silver rookie PSA 9 at $100 a pop today. Just a few months ago, this was a $200 card. And while OKC isn't doing all that great, you have to remember that Shea is a max salary player with many, many years to go. His greatness might not actually be with the Thunder. You could say that it's a long-term play, but I disagree somewhat, as in the short term, it's also not hard to see this $100 being $130 or $150 if OKC can put on a small win spurt, or Shea does a back-to-back 40 points, or make the All-Star team. Small outlay, high yield potential, in terms of percentage. Again, you're not getting rich by this alone, so it's going to be a combination of cards, which is a balance between the card itself, its low entry point, where it was previously in the market, and making those smaller dollar gains, but with profitable yields overall. In the long run, these numbers do all add up. So in conclusion, the market may not see its early 2021 bull run for quite some time going forward, but as long as the interest in sports is as high as where it is today, there is still opportunity to make good money. You just gotta dig a bit deeper. Alright, thanks guys for watching. To the next video. Card Boss out.